Good morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, August 11th. Well, we did get a nice little bump up on Monday. A lot of the gains were really at the opening in the first about half hour or so. Markets rallied up pretty hard and never really gave a good, decent pullback for some solid entries to get long. However, if you were aggressive enough, then you were able to squeeze out a good couple of long trades. Now, I wanted to see what's going on under the hood with some of the indicators that we look at. And really nothing has changed. Last night we had China devaluing their yuan, their currency, and that actually pushed a lot of the currency markets around in the overnight session. We're down now 11 handles in the ES in the pre-market trade. But really it's anybody's guess today. We had a good move up yesterday. Was kind of expected. We were looking for that. I didn't expect a big gap up. I was thinking maybe we'd gradually move up in the pre-market, and then at the opening they'd run them up higher. So that would have been a really nice way to get long. However, we gapped up again, and then we kind of rallied pretty strong for the first 15 or 20 minutes. So I'm looking at a few things. I'm looking for continued choppy to an upward bias for the next couple of weeks or so. Now, remember, anything can really change. China's in really big trouble. Now it's starting to come out. We've been talking about this for over a year. And finally, the Chinese government, they're manipulators of their economic data. And finally, you just can't once it starts to unravel, you just can't hide it anymore. So we all know that China has some major problems and major issues. Can that be some sort of a contagion effect? Absolutely. We do see that bonds are starting to move up here, probably more of a flight to safety than anything. I do think that bonds will begin to roll over yet again. But again, guys, anything could happen here, so we've got to be really careful, especially we have very, very light volume. Yesterday was just incredible how light the volume was on a Monday. As you get closer into the end of August, that's when I was expecting even lighter volume, but it seems like everybody's taking time off already. So just be careful with positions and with your trading, because there's a lot of mixed bag that I see a lot of the algorithms running buy stops and then sell stops, and it's just kind of crazy with the price action here. So just use a little caution. All right, so let's go run into the McClellan oscillator, one of our most reliable indicators here. And as you can see, we've been in a range pretty much all of 2015. You can see that here from this area. Really nothing has changed. We need to really get above 50 for some sort of an overbought reading, or below 50 for an oversold reading. And right now we're just neutral. So that tells me that whatever the current trend is has plenty of legs to run. If we decide that the markets want to move higher, there's plenty of room to run higher before we officially become overbought. Okay, here's the SPX 200, and as you can see here, the stocks above the 200-day moving average is making lower lows and lower highs. That is really not a good sign. While the market's still hovering around 2100, it's just not a good sign, guys. This is something that we need to start playing catch up here and start really breaking higher to alleviate this downside momentum and this bearish symmetry here. This is very important. If the stocks cannot rally as the market rallies, then there's obviously a problem here. So this is something that I will be continually keeping an eye on. Okay, run into the indexes real quick. Again, you see this gap up in the spiders. Where are we? Really nowhere yet. Again, all the way since February, we've been in this range, and it's just been a crazy gap up, gap down, really choppy price action. So just use a little caution. We have done nothing here at all. I'd like to see us take out yesterday's high for some further momentum to the upside, but that's yet to be seen. Okay, take a look at the Russell. Now this is here what I've been saying. Our secondary leader really starting to look ugly now. It was doing fantastic up in here. Made that little high as we broke out, and now starting to make lower lows and lower highs on the daily chart. You could see this downtrend trend line here, this resistance area. We did manage to gap up higher, but again, we're still below the 200, this key area of support, which is now resistance. And let's see if we can tag at least that 20 or right up in that area here. So again, guys, that not a good looking chart. This is definitely what worries me here. We are no question in a downtrend in the Russell, and then again the transports do not look any better. And we'll take a look at that in a moment. Take a look at the diamonds. You can see here again below the 200-day moving average, big spike up again. So where have we gone? Really nowhere. We did definitely recovered, but now we're just underneath that 200-day moving average. The market needs to really prove itself in the next couple of days if we are indeed starting to move higher again. And here's that transports. Well, again, inside day from Friday, but we are above the downtrend channel here, alleviated that downward pressure of lower lows and lower highs. But again, guys, we need to start breaking above that 200-day moving average in all of the indexes in order for us to say, okay, we definitely have some legs to the upside. Okay, if not, I think you're going to have a lot of the big money sell any rally, and that's what I see during the course of the trading day. I see sellers come in on any pop. Sell program comes in and hits the tape, and you can see that exclusively by watching price action. Qs, what can I say? Actually did really well. Apple did well yesterday on an upgrade. And as you can see, that also helped technology sector. So nice gap up, but again, we're still within this. Big, large engulfing red candle. So really haven't gone anywhere. I like to see it take out the 1112, 112.49 before we really see some movement to the upside. So again, market has a lot of proving to do to the upside. I do see us breaking down in a breadth of the market. Okay. So we really have to be cautious here. Crude oil was up yesterday, now down again, $1.12. If the oil sector and these oil stocks cannot rally, it is going to also hurt equities. We should keep that in mind. So watch crude oil, watch the transports, and of course watch the Russell 2000 for some insight and some clues of where this market is headed. So right now, I'm looking for a neutral stance right at the moment. I want to see what the market does and what it opens up the first 15 minutes or so, and then look to get some clues from where the price action tells, and then jump in from there. So right now, I'm staying neutral for today, and let's see. Hopefully, we can get some good trades off. Have a great day, everybody. We'll speak to you tomorrow. Take care.